Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 31st of May 2019, so welcome everyone. Welcome to this Friday's afternoon session where we're gonna have a quick look at the markets, view the charts, some of those that we looked at this morning. So yep, but before we do all that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. There's always a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now the first one I want to touch on here very quickly is the Nasdaq100 index. So looking at the Nasdaq100 cash index right now, we can see that actually is going to be well, where it is not going to be, but it will be a low close, low open here. So we're basically going to open with a gap to the downside here. And previously when I talked about this, when I was telling you guys to keep a close eye on the 7,205 zone, approximately there, so 7,205, 200. But looking at the cash index right now, it's currently already sitting near its 7,160 zone. So of course we may see that one, the index opening around that price. It's of course a little bit lower than this key important support zone that I've talked about previously. So in a way, for now, of course, all this kind of is still looking quite bearish. We can see that the index continues to trade below its little tentative downside resistance line. So as long as it kind of remains intact, we will continue aiming lower. So in a way, even if we see a correction back to the upside here, as long as the price remains below this, then yep, we will remain negative, at least in the short run. Now, also, this would come in line with the fact that the index is, looking at this 4-hour chart, of course, the index is trading below its 200 EMA. So in a way, if we see a push back up here, a test of this downside resistance line, if it holds, this would kind of would keep the price below the 200 EMA as well. So kind of all this would add up to this bearish kind of atmosphere, and we could see another leg of selling, which could lead the index towards the 7,045 zone, approximately there. Slightly below that, we do have the psychological 7,000 level itself. So yep, for now, guys, like I said, it doesn't look quite promising. It doesn't look that for us, let's say, to start considering higher levels. Ideally, we would like to see a push above this downside resistance line, this tentative downside resistance line, and of course a push above this level right here at 7,353.55 area, approximately there. Let me just put this one here quickly. So approximately around there. This would also place the index back above its 200 EMA here on the 4-hour chart. And we could then target areas like the 7,600, which has played a very good role of resistance. So this could be our nice good target. But again, we will only consider the upside if we see a push above this level right here. That's of course for now here. If in terms of the downside, again, we may see a small correction to the upside a little bit. Like I said, we will be opening with the gap to the downside here today. If this travels higher, but let's say fails to overcome the 7,200 level, then well, you could expect another leg of selling a little bit earlier, and we could then, like I said, target the 7,045 zone or even the psychological 7,000 level. So for now, keep your eyes on that. Let's see how this is going to play out today. Gold. Now, I talked about this one this morning, and basically I was anticipating a correction a little bit earlier, But as you can see, that gold continued to travel higher here and continue to push. So basically it managed to reach its R2, today's R2, which was around the 1298. It didn't quite reach the psychological 1300 level, so just fell shy from just a few ticks of from reaching that. So we're still keeping a close eye on this one, on this 1300, 1301 level, before we could get excited with the with higher levels in the near term. We would like to see a good push above this area, above the 1301, before we could, let's say, consider a possible move towards the 1310, 1312 zone. So be very careful with this one. Again, looking at this picture, it is quite extended here to the upside. So in a way, do not exclude a possibility of seeing maybe a small correction, maybe even actually going back towards the 1289 zone. But if it starts breaking below the 1289 and 87, certainly be very careful here. And as I said in the morning, for us, let's say, to consider the downside again, at least in the short run, we would like to see a drop below the 1275 zone. This way we could target this very important 1266 zone that I keep talking about in every single time I'm covering gold. So in order to, let's say, to consider further declines in the near term, a break below the 1266 level is required. But for now, it seems that the downside could be slightly off the table, unless it's a small correction to the downside here up until it hits the 1289 zone. So this 1289 could be a nice, good potential support zone for gold. So keep your eyes on this one. Now jumping into one pair that I really wanted to quickly touch on, and that's US dollar against the Mexican peso. Now, if some of you are not aware, so Donald Trump kind of came out yesterday, or should I say overnight, with some threats that he's willing to impose some tariffs on Mexico and Mexican exports. And of course, this is what the effect that we had, here on the USD Mexican pair. So basically, of course, it traveled higher, managed to break some key important resistance levels. And for this one, let me just quickly jump into a daily just to show what's happening here. This is kind of gonna paint us a better picture, let's put it that way. So the most important is that it managed to break this very important resistance zone. This, as you can see how well it was playing out. So previously, back here on the in October, in the end of October, on the 24th and the 25th of October, it acted as a good resistance line, but then it also had a nice strong pierce through it, and then when the pair started retracing, it kind of balanced a little bit here, so it acted as a good area of support, and then eventually kind of slid, kind of opened the door for a further decline. Again, we had a nice test here on the 7th of March, or in other words, it was the highest point of March, and now again we managed to break it and actually pierce through it, and the pair managed to travel all the way here towards the 1981.20 zone, approximately there. So it got held here today. This was the low here that we saw on the 20th of December. So basically, the pair managed to reach its in one day, quickly managed to reach its the end of December levels. The question here is, of course, yes, we may see this one retracing a little bit. The only problem here is when. Now, for now, we're going to be very, very careful with this one. We're going to consider this as the next potential area of resistance near the 19.9660, approximately there. In a way, we may see maybe a correction earlier, so we may see something of like this here, where the pair would, for example, initially travel to the downside, test this level right here, this breakout point that at around 19.62, and if it continues to hold, then yep, that's a good kind of signal for the bulls to step in again and push this one higher, maybe beyond the 19.8120 zone, and kind of aim for this 19.9660 area, approximately there, which, as you can see previously on the on the 19th of December acted as a good area of support, and then on the 24th, 25th, and 26th acted as a very strong area of resistance. So that's why we're just going to target that level, and then we'll see, and we'll just go from there and see what he wants to do further. For now, of course, we are bullish, but we are expecting maybe a small correction before another leg of buying. In terms of the downside here, in a way, if this starts dropping lower below the 19.62 level, then this little territory is going to be for us a little bit of a neutral one, because if this drops below the high of the 29th of March, now this is where it could become interesting for the bears again, and we could see this one sliding a little bit lower here, potentially kind of aiming for some of these previous, previously they were acting as resistance, now they would take the role of a support levels. And also keep in mind this little tentative upside support line here, which also could kind of play out nicely. So for now, guys, of course, this is looking more bullish than bearish, but in case this suddenly drops below the 19.47, 19.48 level approximately there, then yep, we could consider a slightly deeper correction, let's put it that way. Jumping into another pair, which I really wanted to show you guys. Now this is GBP Aussie, and of course the pound sterling continues to fall. It seems that just cannot find any support, but looking at this pair here, you can see that the GBP Aussie managed to find a good area of support here near this level, near this 1.819590 level approximately there, which is marked near the lows of the 23rd of April. But probably, as you can see already by the chart here, the most important thing is this little formation that we've got, kind of that was building out throughout the whole month of May, and this, of course, you can kind of consider it as a nice falling wedge formation. Of course, according to textbooks, we expect this one to break to the upside, but again, for now, it seems that there is kind of no hope for the bulls yet. Unless this starts pushing higher, then yep, we'll consider higher levels. For now, even though I do have this level highlighted here at 1.83 zone as the potential kind of breaking point towards higher levels, yes, it kind of still is the one. I mean, this is the kind of that better confirmation for those who are more on the cautious side. But what you could also do here, guys, is just keep an eye on these little highs of today's highs near the 1.8270. Just kind of if we see a push above this upper side of this falling wedge formation, keep your eyes on this 1.8270, and in a way, if this kind of gets a nice break here, then yep, we will target this 1.83 level, because still this level for us is going to be the more important one. If we see a push above that, then yep, we may see this pair traveling a little bit higher here, maybe towards this 200 EMA. But for now, guys, the upside is kind of slightly off the table until it's kind of, as long as it continues to trade here within this formation, we will target slightly lower areas. Again, there are some good potential support levels here underneath, just in case, let's say, this decides to break through the lower side of this wedge, and if it does, then the areas that we're going to be targeting first, of course, is the 1.812930 zone approximately there. And slightly below that, we do have the 1.8095 level, which marks the low of the 17th of April, or in other words, the lowest point of April. For now, keep your eyes on this. Keep your eyes on this formation, and we might squeeze something out of it. USDCAD, very quickly on this one, a quick update. I talked about this one this morning. Now, it managed to travel higher. It managed to reach our target just bang on the 1.3565 level, and it started now retracing, and as you can see, it did retrace all the way back here towards the 1.3522, that little breakout, that little gateway that I was talking about in my previous videos, in today's video, and this week. So managed to travel all the way down here, test the 1.3522, and then rebounded back up here. So now it's currently sitting staying here between these two levels, these two important levels. Now, in a way, we could see maybe another slide, maybe another test of the 1.3520, 22. But again, if to be honest, if this starts breaking, we're not gonna start jumping into those sells, because the last option for the bulls could be to come in around this upside support line, this tentative upside support line. If that fails to withhold and we see the rate falling below the 1.35 zone, now this is where we may expect this one to slide a little bit lower. So for now, of course, all this kind of is still looking quite positive. In a way, if this, let's say, decides not to travel lower, not to correct to the downside, if it starts pushing higher again and breaks the 1.3565 level, then if that happens today, then we will target the R3, which is around the 1.3573. But if it happens, let's say next week, then we will kind of examine the upside. We'll see which potential areas could that the pair could hit, and we'll take it from there. For now, there could be a small correction, like I said, but let's see how, if it actually travels lower, if it gets held here near the 1.3522 level again. If it does, then that's good news for the bulls. We could see this one traveling up to the upside again. Like I said, the last kind of option here for the bulls could be this upside support line, and if we start breaking the 1.35 level, then we could eventually maybe roll over here and test some of these lower areas. And very quickly on USDJPY, now I talked about this one this morning, and this is what I was saying, guys. We were trading still around here basically, so we were still slightly below the 109 zone, and what I was telling you to keep a close eye on this 108.70. so as you can see, it managed to play out nicely. So we did have a couple of tests here. The rate got held, from which it rebounded, and now it's sitting above its S3, which is around the 108.75 area approximately there. Also mentioned this one this morning, and in a way there is a chance for this one to maybe push a little bit higher here, maybe test the 109 zone, but if it struggles to overcome it, then we may see another leg of selling, and in a way this time maybe the 108.70 level could fail to hold, and if it does that, then the next potential target for us is around the 108.50 level. So we're just going to go slowly, step by step. That's, like I said, that's our target. If we do reach that, and if the pair overshoots that, then we'll just examine the pair again and see what it wants to do then. But for now, like I said, there could be a small potential possibility here for a correction. If it struggles to overcome the 109 zone, then we may see another leg of selling. But if this starts pushing back above the 109.20, now this is where you should probably take a more cautious approach and just probably stick around and wait until you see a more like, let's say, clearer picture. But if it starts pushing above the 109.70, now this is where it could become a little bit more interesting for the bulls. But for now, it's quite far away from there. Let's see how this day is going to end, and let's see where we open, or should I say, I wouldn't say open, but let's see how Monday is going to start. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching until the end. And if you want to join me on Monday, as always, that's 6 o'clock GMT time, my Trader's Espresso, where we're going to have a look at the a few of these instruments here and some other ones as well. So, but for now, I hope you have a wonderful evening. I hope you have a wonderful weekend, and I'll see you later. Bye bye.